Total solar eclipses happen all the time, once every 18 months or so, on average. In theory, you could see dozens of them in your lifetime, but you won't. The one coming up on April 8th may very well be the only one you will ever experience, if you're lucky, and I'm going to explain why.
This is an experience beyond all experiences. You can't prepare yourself properly for what this is like.
I've been told to see a total solar eclipse is a defining moment in one's life. The bright sky gives way to a creeping darkness. The ambient light changes. The air gets colder, and the moon slow glides into place. These brilliant beads of light shimmer and disappear, one by one, until there's nothing left but that dancing glow of the sun's corona, its atmosphere, giving this halo to the moon.
This spiky streamers and long brushes and these shapes that you can't even describe come shooting off the surface of the sun.
But the sun's rays, completely blocked.
You cannot prepare yourself for how intensely cosmic it is to stand in the shadow of the moon and observe the corona. So that lead up, those last 15, 20 minutes leading up to the shadow of the moon arriving on top of your head and transforming your environment. It is a peak experience. It was a peak experience in my life.
Whoa, I never thought I'd see this. Oh my God. Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Happy total solar eclipse day. The solar activity took out my Starlink satellite, guys, so I have to record this on my screen recorder, and then I'm going to try to upload this on my mobile data off my phone, the things I do for you guys. But we are at a pivotal point in the marketplace. This retracement is incoming, long forecasted. We're going to look at the market cycles. We're going to look at the levels here in the US indices, the cryptos, as well as the international indices. It's going to be a big video. But guys, I want to address a question I keep getting asked in the comment section. And that question is, how come this can't be the blow off top where we are right now? Because as you guys know, I'm looking for this retracement. We're going to go over the targets and then a bottom and then a move to the blow off top. Let me answer that question really quickly. So in my view, the liquidity, there's so much liquidity in the marketplace right now, the loosest economic financial conditions, according to Goldman Sachs, prior to even tightening. Combine that with the weekend at Bernie's Pampers administration spending $1 trillion every 3 months to try to keep the market afloat, to try to keep the economy afloat, to try to get re-elected, okay? I think that's going to provide enough liquidity to get this rebound. Will we get a lower high or a blow off from there? We shall see. The candles will tell us, guys. That's the important thing. Also important that I'm already short, as you guys know, because I believe this retracement is going to be substantial according to our patterns. Now, when I make my forecast, it's based on the cardinal points in the market. Long-term subs already know this. We look at timing cycles. We look at patterns in the marketplace. And the most important timing cycle, time is more important than price, is the cardinal points in the market. What are the cardinal points in the market? Spring equinox, fall equinox. Every single 3 sigma bubble has adhered to the spring equinox, fall equinox, cardinal points in the marketplace. Not only that, we have a solar maximum. We've covered this many times. Every single 3 sigma stock market bubble in history in the US stock market going back the last 100 years happened in a solar maximum. We are in a solar maximum now. That cycle got pulled forward from the end of the decade to now. 1929. Fall equinox, you had Black Tuesday. Black Tuesday is when the market began to break down. Did not make a new all-time high for over 20 years, lost 80% of its value. Fast forward to the 1970s, the Nifty 50 bubble. October 1973, fall equinox. This happened with the oil shock. Oil went from $3 a barrel. Yes, you heard me correct. $3 a barrel to $12 a barrel. This ushered in the lost decade of stagflation, inflation, and the market fell 66%. Fast forward to 1987. Black Monday, the single largest day break in stock market history to that point, was in when? The fall equinox. These are 30-day time periods around the spring and the fall equinox, guys. And what did we have in .com? To the day, March, spring equinox. The markets peaked and then they broke down. The S&P fell 50%. The NASDAQ fell 84%. And when did the markets bottom? The fall equinox 2002. Go to the GFC. When was the big break in the market? The fall equinox 2008. When did the market bottom? It bottomed in the spring equinox 2009 after the S&P fell 57%. When did the pandemic occur? The spring equinox combined with their 35% sell-off in the marketplace. So these are always going to be my two key points in the market. If this is only a retracement, which I think it will be, barring a black swan type event, expansion of war, weapons that should not be used, a debt crisis, barring a black swan event, I expect this retracement, and then I expect the markets to move higher and make a blow off top. Okay. And then we're going to look at the fall equinox this year, because if we look at my charts, let's just jump right into it. If we look at my charts on the E-mini right now, we are starting to retrace at 52.53. Let's look at this chart. We went over this. I built this out for you last video, so watch the last video as well. We have our lunar eclipse down here. We had our lunar eclipse on Halloween, gave you the market bottom. We just had another lunar eclipse combined with our total solar eclipse today. Looking for this retracement. We covered these levels. I'm looking for this to come down to that July high at my lower level target at around 4,600. If it's a shallow retracement, that 4,800 level, basing this forecast off the lower level target here, okay? So looking for this retracement down to 4,600, and then bottom should be around the June 25th. June 20th is the summer solstice. And why am I basing that bottom off of that particular date? Because I'm looking at market symmetry here with the marketplace. An 11% decline, 22 bars, 93 days, right? So we know the eclipse crash cycle typically plays out over 89 days, which is a Fibonacci number. And this also lines up beautifully for 20 bars, 89 days, June 25th, June 20th being the summer solstice. So if we get market symmetry, you don't have to get market symmetry, but I'm expecting market symmetry, that I'm looking for this bottom there in late June, June 20th to June 25th for a bottom, and then a move to the blow off top. Based off our Fibonacci projection, my three targets are 5,663, 5,835, 6,082 for the 1618. Now look at this. This is what's interesting about this cycle. November 18th. November 18th, 2024 could possibly be our blow off top. Why is it interesting? For those of you outside the US, or perhaps for those of you in the US, that's the election. That's the presidential election on the 5th. So this is a couple weeks after that based on the timing. But how am I getting that timing? Let's look at this. So the timing here on the S&P, let's take this last wave, this last impulse wave up, 2 to 3. 35 bars, 153 days. What is a harmonic cycle? 144 bars, okay? 144 days, harmonic cycle. So we have this. Now, what's interesting is if we take this complete market bottom up to wave 1, that's 66 bars, 287 days, right? That's not market symmetry with this current wave pattern. However, if you look at when this actually broke out, from this consolidation, this Wyckoff accumulation range, this is your actual impulse from this move. And when you look at this, this makes more sense. 32 bars, 139 days. Again, right up against a key harmonic cycle. Market timing, market cycles are very important. So knowing this, 34 bars, approximately 144 days, let's go ahead and just project this out. If we come out to November 18th, that gives us 34 bars, 146 days. 34 bars, 34 being Fibonacci, and then you have 146 days. We're on a 3-day chart here, by the way, guys, but I'm really focusing on that day timing, okay, of the daily time frame. So watch this range. Again, this is just a projection. This is not a guarantee, but this is calling for a blow off top based on the market symmetry there in mid-November. And once we get this retracement and know where we bottom at and know when we start to move back up, we'll be able to get some more tighter fib projections. But this is the pattern that I see playing out here on the E-mini for the S&P. Let's look at the S&P here on the daily. On the daily, guys, we nailed that top with our fib projection, 53.33. You have weakness in price. You had a rollover back down, but really you're not going to see a trend change here unless you can get below 5,200, specifically 51.91. Your 50, which I don't trade with moving averages, as you guys know, but so many algos do, and there's a big pool of money chasing the 50. Your 50 is still further down at 51.25. So that's the first key structure you have to break down. Get below, maybe you get a retest. That's when all the normal people on YouTube will be like, oh, that's where you got to trade, right? So you get this move, you come back down, you get a retest to the 50 potentially, and they'll be looking here to trade. But if you understand Fibonacci, market timing, market cycles, we've been talking about where to trade up here for weeks on this channel. So that's the S&P. Let's see what it's doing here on the momentum on the indicators. MFI, still bearish divergence. No surprise to anybody watching the channel. Momentum rolling over, as you can see. Remember, the winter solstice, the summer, or the Santa Claus rally in December was peak momentum, peak FOMO. Everything since is divergent. Okay, that's why you're going to get a substantial retracement down to 4,800 or 4,600 once this starts breaking down. Remember, the CPI is Wednesday, guys. The CPI is Wednesday. So this is a key event. It's supposed to come in hotter year over year, but month over month, they're looking for spot 3. Right? So we're going to see spot 3 is hotter than the Fed wants. The Fed wants spot 2. It's 50% higher month over month than the Fed wants. But the Fed is a political animal and they don't want to upset the Biden administration. So what Powell's trying to do, which I find really interesting, Powell's trying to play 3D chess. Powell is going out there saying, oh, we're still going to cut rates, but every single Fed member that's talking, including the most dovish of Fed members like Daly, like Bostic, like Kashkari, they're all saying maybe just one cut, or maybe no cuts, or maybe that one cut later in the year in Q4. So Powell's trying to talk up the market, give hope, keep the market up, and then the rest of the Fed is coming out and talking and saying something different. So it'll be really interesting to see how this plays out. Let's see how this translates on the NASDAQ 100 on NQ. Again, same exact wave pattern, guys, but we're looking for this 12% retracement. We built out the S&P chart last video. Let's build out the NASDAQ chart. So this 12% retracement we did before. I want to show you this. Actually, let's go ahead and pull this fib so you can see this. What we're looking for is off of this October low from wave 2 to 3 here, coming right down to this 618, 15,885. You see that? So this retracement, by the way, will line up slightly deeper than the prior retracement if we come down to that July high, a 15% retracement. Again, a massive, massive move. Look at the bar count. 23 bars, 98 days. 23 bars, 100 days. If we get this exact same retracement right around this time period of June 25th or just the next bar after it here, June 28th, you're looking at market symmetry, 22 bars, 97 days. You're looking at market symmetry, and then I'm looking for the move to the blow off top, okay? So let's go ahead and get our projections here. How do we get this target up here for our wave 5 blow off top? Once again, we're looking at our Fibonacci projection, pulling down a fib retracement from 3 to 2. And my 3 targets, 19,951. I don't think you get the 19,951 and not hit 20K. So I'm really looking at that 20K level, the one spot 414. This is 20,600 and then 21,532 for the 1618. When does the timing on this kick in? Once again, November 18th. Why does that happen that way? Because we have our prior leg, wave 2 to 3. We have wave 2 to 3 took how many bars? 34 bars, 148 days. And once again, if we take outside of the accumulation range here in Wyckoff, the impulse leg out up to 1, 30 bars, 131 days. So let's go ahead and measure this. Right here from our wave 4, our retracement of 15,885. Let's go ahead and pull this out. Where does this bring us? 34 bars, 146 days. Completion of a Fibonacci sequencing count, as well as a harmonic cycle calendar day count of 144 days. That's once again, November 18th. Interesting, right? Very interesting. Hopefully the country's not in total chaos when this event occurs. Something else I want to show you guys. Key concept, Charles Dow, W.D. Gann, the natural halving and doubling in the marketplace. Something the NASDAQ will have done if it comes up to achieve these levels of 20,600 or above. A 100%, a doubling in the marketplace off of the market low. Lots of people are asking me in the comments, what happens after the blow off top? Guys, for that, I will say, you need to watch my videos. These videos are unique in YouTube in that I'm teaching you concepts, but also sharing with you my personal forecast. You won't get this other places, but I can't repeat the whole market cycle every single video, or these videos are going to be an hour and a half long every time I make them, and I don't have that kind of time. But after the blow off top will be the descent to take out the market lows. That is the projection because the marketplace has never put in a low prior to a recession. So can the liquidity in the marketplace, can the FOMO, can the government, the Fed manipulating the market, keep it afloat through this upcoming fall equinox into 2025? That remains to be seen because we have to get through that time period. But if they do, it doesn't change the cycle. Every single one of these market cycles has played out the exact same way, going back over 100 years, and the low has never been put in prior to a recession. So you will get that recession, whether it's this year, whether it's next year, nobody knows for sure, but we have to get through the fall equinox, the back half of this year. And when you have that recession, guys, or when the market comes to the realization, that is when you take out your lows, the market lows. That is what happens after a blow off top, the descent to the bottom. Look at your previous cycles. What happened in .com? It took 2 years to come down to your market bottom. And GFC was much faster. So the speed, everything matters, but that's all talking. That's all projections. Why? Because look at the chart. You need candles, right? When you have candles, you can get accurate harmonic proportionality. You can come up with an economic thesis based on the conditions in the market, based on the geopolitical sphere landscape of the world. So that's a little bit farther out there, guys. As a trader, I'm trading these moves. I'm short the NASDAQ above 18.6. We're at 18.3 right now as I'm recording this. I'm expecting a very nice retracement either to 16, 17K here or 16.9, so 17K down to just under 16K, 15,885. All these retracement levels are the same, guys. Either that clustering from December, those candle clusters for the winter solstice, the Santa Claus rally, or coming back to retest your July highs. These are my two retracement levels. Being that I'm short, I want it to come as deep as possible. That's what she said. And let's go ahead and look at the next chart. Looking at the NASDAQ on the daily time frame, guys. So the daily time frame, what's our indicators doing? Indicators bouncing back up over the median line here. Momentum is still down on the daily time frame. You had this nice little rebound rally. Now, something the NASDAQ did, let's go ahead and look at this. Something the NASDAQ did, throw the 50 on here. The NASDAQ came back and kissed the 50 beautifully, right? Formed the fractal, kissed the 50. Let's just pull this down so you guys can get an idea of what's going on here. That's the first time you hit the 50. This whole rally up since October is the first time you back tested the 50. You're beneath the 20, you're kissing the 50. And again, looking at our timing cycles, looking at our Fibonacci targets that were achieved, looking at our patterns, this is all in confluence with why I'm expecting this retracement. As of right now, you want more market downside, take out 18,051. That fractal low gets you below the 50, and then you will see the market begin to break down further, maybe get a retest of the 50, and then start breaking down towards our targets. I do believe that's going to be happening here. A potential major catalyst will be that CPI, guys. So that's what I'm looking at in the NASDAQ. You want more upside, you got to come back up, take out 18.7. If we look at the Dow, same thing. You got below the 50, came back up above the 50. You're at 39.2, and you hit perfectly the 1618 at 40,298. Dow looks very weak. You're still below here. Everything's going to maybe kind of hover here, if not get weaker prior to the CPI. If the CPI is a great report, great meaning lower inflation, you're going to see a rebound rally up, guys. It's that binary. If it's not a great report, you're going to see the market sell off, and most likely you're going to see volatility, meaning ups and downs. Half the population in the trading space will think, oh, this is fantastic. The other half will say, oh shit, this is really bad. So you're going to see some volatility, but ultimately big dumb money will win out. And as you can see, the markets fall 3 to 5 times faster than they rise. Let's go ahead and look at BTC. BTC, guys, diamond pattern breakout here on the charts. And if you look at BTC, this played out beautifully as well. You guys know this that are the long-term subs. I know you guys hate me repeating myself, but we get new subs all the time. October 2023, I shared this diamond pattern breakout with you on YouTube, a 20% gain, 130% gain. My bad, 130%. So that I shared on YouTube. We had this breakout. I gave you guys this upside target from this accumulation range in Wyckoff here, where this would go. Hit beautifully the 2 fib, 73,765. We're forming a key diamond pattern structure right now. We have not taken out the high. We're going to look at this in a smaller time frame. Do not worry. But if you look at your fractal high, 73,843, and you have your low here, obviously, 60,780. You guys know where I think this is going to retrace to once this starts breaking down, when the markets actually start dumping. I think Bitcoin's going to get pulled down with it. Regardless if it breaks out to my upside target of 76 before that happens, Bitcoin's going to pull down with the market, I believe. But if we look at our retracement levels of where this can go, let me go ahead and add my fibs back here. 0.5, 786, 1, and should be good to go. All right, so we're looking at the 0.5 fib, a 50% retracement, natural halving and doubling of the market, doubling of the moves, halving of the moves. 44,663, guys. That's the level I'm looking for Bitcoin to come back down, and then we will be moving towards our blow off top. I shared those projections with you last video. I have targets as high as 102, 103K, could be as low as 91K. If everything plays out, look for 6-figure Bitcoin. But what's going to be scary and what's going to anger the trolls in the comments is that you're getting a major retracement first with this major market correction coming in. So let's zoom in and look at this. 8-hour time frame, you get more candles. Building my fractal corridor here, you can see 64,450 right here is a key level to try to stay above, as well as getting above this level, 71,850, which you are not yet. You wicked above, you came back down. But guys, what is this structure? What is this pattern? This is nothing more than a W pattern. This is how we can get our target projections if you break out to the upside. If we look at this on an upside breakout, shared this with you last video, 76,423 would be the harmonic target of the 1618. And in my second target I would look at as well of this W pattern is right here at 81,916. Gave you these projections before for upside if you get a breakout in Bitcoin. Now, All of this to me is going to depend on how quickly the markets start breaking down and retracing. Again, you have to look at your key catalyst, which immediately is a CPI on Wednesday. Okay. If that comes in hot, markets are going to reverse. You could see Bitcoin pull down immediately with them, but Bitcoin being such a small asset in the grand scheme of things, you could get that manipulation up to the upside, guys. Your 77, your 76, 77 target up to your 82K target prior to a pull down, which is why it's important to watch it and pay attention to the other landscapes, the other marketplaces to see what's happening. You're at 71,823 right now. So you got to flip these key levels. You got to flip 71,850, flip 73,843 to get those upside targets. Conversely, if you start falling back down once again below 64K, 64,450, and definitely and obviously if you come down below the lowest fractal here at 60,780, you're going to begin your retracement down to that 45, 44K level. Okay. You don't have to believe it. We'll see it in when and if it happens. Let's go ahead and move forward. Solana. Not as exciting as Bitcoin. Again, we've had a couple rinse and repeat trades. I posted on our Discord, shared on YouTube as well. 20% drop on a short, 14% drop on a short. So Solana's just in that mid-range right now. I know some people in the Discord are still holding their shorts. Other people probably took profit. I took profit as well. And now you're just ranging. This is waiting on a catalyst to the upside. You need to get above 205, actually 210 to get more bullish on Solana for upside targets. And if you start closing below your 162, you're going to the downside in Solana. I'll update this on another video. This one's probably getting kind of long. Ethereum as well. Ethereum, you have to flip 3,700 to have more upside. Key upside level to really flip up here is your 4,013 to get above this level and get more upside. You're forming a W pattern here as well. Do you see this W pattern? It is down further, but you have a W pattern. So Ethereum, not surprising, right? The altcoins are going to track similar to Bitcoin to one degree or another. More downside is in the cards if you lose 3,053. You're in that mid-range. Mid-range, don't do anything. Where do I trade? I trade at extremes. I trade at extremes. So this is what you want to watch and see what happens in Ethereum. Again, CPI will be your catalyst for the markets. Your markets will be your catalyst for what happens in crypto. Current price, 3,660. Watch that level right above you, 3,700. What's ADA doing? Shared this on Discord as well, but this is a, look at the channel ADA's in here on the daily time frame, and you have a key fractal low here. You're holding it as support 1, 2, 3 times now. You're getting a little bit of a bounce off. You have a W pattern forming here as well, but you got to take out that fractal to have any more upside here. Let me go ahead and show you where that is. This will be 68 cents. So you got to get above that. Again, this is going to track with the other markets. And obviously, if you lose this channel, lose this fractal, that 56, 55 cent level, and you come down and you back test it and you start breaking down, there's your Livermore pivot. There's your breakdown to the downside. That's what you want to watch. And that could very well be in the cards if the equity markets roll over and start selling off. Again, right now you're at 61 cents. Key resistance at 68 cents. Got to take that level out, and key support at 55 cents beneath you. Let's go ahead and look at the DAX. DAX demonstrating your 3 waves to a bottom so far. You have 2 waves. Wave 1, here's your wave back up. Wave 2 down. So will we roll over with the U.S. markets and get wave 3 down? I do believe so, as soon as they start actually capitulating, which again may not occur till Wednesday, Thursday after the CPI and the market has its bout of volatility. We look at this from a Fibonacci perspective. I want to look at this second leg here. And you can see you got above the 618, 786 is at 18.6. And then I want to look at confluence here with the all-time high to this retracement so far and see if you're at any key levels. You're between the 382 to the 0.5. The 618 is higher now, 18,650 up here in this cluster. Again, this would be a key fractal you would have to take out to the upside to get more upside. And your downside fractal, if you break this and start coming down, is 18,327, 18,678 to the upside. So watch those moves in the DAX in confluence with the other markets. Let's look at the ASX, the Aussie. I reckon this is going to be a good one. Let's look at the Aussie index here. Again, we had this projection up here. You got the 79.58. Nice capitulation back down, but really you're just trapped again between the 2 fib and the 1618. You haven't done anything different. You're leveling down. You're going sideways. World equities are driven by the U.S. markets. We discussed that last video. If we take a more narrow Fibonacci retracement here, you're above the 382. The 0.5 fib, we talked about getting to the 618 before. The 0.5 fib 7876, 618 is at 7900, which is right lined up with. If you want more upside here on the Aussie index, guys, you need to get above this level. You need to get above 78.99 to break that fractal, come out to the upside. If you start breaking down beneath 77.80, this is your trend change back to the downside, okay? You're hovering in this tight Fibonacci range right now, and you can see the candles leveling down. Again, will be driven by the U.S. markets. Guys, hope you enjoyed this video. Be sure to like and subscribe. Check out our Discord. Check out our fantastic sponsors. All that information is in the video description. And I'll talk to you guys on the Thursday update. Enjoy the eclipse, everybody.